Welcome back to Royal Blu FX. In today's video, we're going to do a quick recap video on US30. We're going to do a quick recap on the trades that we've taken just as of yesterday, which was on October the 17th, which is a Monday. So let's get on with it. Alright, so as usual, we always start on the 15-minute time frame as our higher time frame, and we utilize this the 15-minute time frame as our directional time frame and as our structure time frame as well. So what we did here was we looked at the higher time frame right here, and we were trading this data over here. Right over here, we had our supply zones marked out right over here, and then we also look at where price has been in terms of liquidity. You can see that there's liquidity here, right there. So we didn't do too much marking out liquidity because there wasn't much that you could see here. Structurally, you can see prices are pushing bullish here, so we were able to follow the markets going bullish over here, right? So now that we were here, let me just go all the way down to another time frame or two below. I'm going to go on the 1 minute here. I usually drop on the 1 minute here, and then I start looking for more liquidity that I can mark. Now I trade the US30 open over here, and the New York open. The New York opens here at 4:30 p.m. So normally I would mark out all my liquidity like I always do, right? You can see that there's liquidity there. Let me just expand this a little bit here for you guys to see. And you can see my crosshairs. It says 6:22 p.m. at this moment, and I'm literally about 15 minutes before the market opens happens, so I can just get prepared to look to execute. And once I marked out liquidity here, liquidity there, right, you can see that in overall the direction is pushing bullish. So I'm looking to trade with the market, with the direction of the market. And then I obviously scale down to lower time frames. Let me just do this here so I can show you guys. Okay, right over here, let's go to the 5 second. And so once we got to the 5 seconds, I'm looking for the entry, right? Now, so with the 5 seconds, what's interesting about this is I look for order flow, I also look for structure, and I also look for liquidity. And they all happen to come into a nice confluence together in order for me to make my final decision of where I'm going to be buying or selling. Okay, so as you can see here, we had some liquidity, we had a chalk, right? Price broke a chalk here. I was looking for price to come here to this demand zone only because prices have left from here, right? You can see that this was the origin of the low, and prices have pushed bullish, so my expectation is for price to come here all the way bearish, come and sweep the liquidity at this low, and then push bullish. But that's not what happened. Obviously, it came down here, respected this area here, this supply zone, this demand zone right over here, and pushed bullish. Now I'm still waiting for 6:30 to open, right? You can see here at 6:25, right? As I push my crosshairs over this way, you can see at 6:29, 6:20. You can see that I'm really getting ready to execute here. I marked this whole area here, this last bearish move here before the major move pushed up like this, as my demand zone. And the reason why I did that was because I was expecting for prices to come here, right over here, to break the structure above and then come and test this area, at least test this demand zone right over here, and then look to push bullish. But sometimes, in rare cases, prices don't test your demand or supply zones, and it just kept going bullish here as it has happened. Now, obviously, I can't chase the market, and I haven't at all. I was just watching the market do its thing. I'm waiting for prices to give me a chance to get in so I can come and finish the rest of this momentum move, this huge move to the upside, to come and touch this supply zone. Okay, now as you can see, when prices are pushing bullish here, it's just showing a lot of break and mitigations. And what you want to do here isn't just to get inside a break and mitigation area, although you could. But my expectation is just to look for the mitigation areas, and then wait for prices to come and take these areas of mitigation as liquidity and mitigate an order block, and then look for prices to push bullish. So as you can see here, I had my demand zone ready to go, right? I'm still just kind of marking things out, just hoping and waiting for price to come in, like form liquidity like this, come into this area of demand, and then look to take prices to the next, to the supply zone here. But unfortunately, prices did their own thing, and of course, I can't get mad at that. I just need to watch the market, create and move. All right, so right here, prices have tapped our supply zone. So my expectancy here is to see if prices can hold at this supply zone. Notice over here we have a huge supply zone. Can't quite see it here, but if I go all the way here, you'll see this is one of my supply zones here. Right over here. Okay, it's too far. Let me just go back here. It's one of my supply zones that I targeted. And so I'm expecting for prices to sell off here, and only because prices have overextended and prices haven't really created any liquidity, at least noticeable liquidity that I like to see. Something very vivid that you can see, something like this, something big, right, for prices to come down, take that liquidity and maybe push prices up. So what I did instead here was once prices hit my supply zone, my rule of thumb is once price takes liquidity, it takes that liquidation, this internal liquidity in here that you guys can't see just yet, but all this here is internal liquidity on the higher time frame, and then it liquidates and then mitigates. And now what I'm looking for is for prices to extend just like this. Hold on a second, wait until price does this. Okay, here's the extension. That's the aggression that we look for. Once you see that aggression, then I simply map out my my thoughts here, thinking to myself, okay, well, what am I looking for here exactly? There's only two criteria here that we're looking for: either for price to create more liquidity, which it created, and then we see that flip, which is price mitigating or coming into an area of a premium zone, right? So prices came into the premium like this, and I sold it off after the premium because I know prices have overextended, came back to the premium where that flip, that order block is waiting for us, and then we sold off. Of course, we had another high here ready to go. What if prices didn't respect this order block? For all we know, this could have been an inducement in the market and to come and tap this high here and then go. And the reason why I had this as a supply zone here is because if you see this order block, this is essentially the last order block as well, because this high here swept the liquidity over here, as you can see, and then pushed bearish but never mitigated. So that's why this was also another possibility that prices could have come up here. But in any case, it's we took the entry here and we just held it. We always take partials about 50% of the way, and we target our demand zone. This is a potential demand zone that price was potentially going to come here, react and go based off of this liquidity here. And so we held it here, right? We always take partials and we let the rest run. So you can see here where prices are reacting off to this order block. I had my supply zone here ready to go as well if price came up there, because I was looking to sell this long term. And fortunately for us here, prices have just extended really nicely. Now I was targeting this low as well now, only because this was where the origin of the move happened. If you see right here, right, there was your low, there was your high, right? The push happened here, so this was my target, and I was targeting this low. But I also decided, well, maybe I could target this demand as well, because now that I've taken the majority of my money here, right, I now have a lot of it. I have most of the trade, most of the money now floating in here now too. Okay, and so I'm taking partials as I go bearish here. So I extended down to this demand, working to see if prices will come and tap that low. Now, along the way, I'm scalping, right? Most of the time I am just scalping because I am a scalper. And you can see here, the reason why I looked for the sells here, and I'll explain why in a second, is because you can see that currently this bearish, the markets were bearish here. Prices were going bearish right here. Okay, so it's creating a lot of mitigations. It's sweeping some liquidity, like right here. We had a sweep of liquidity. Right there, you can see the sweep of liquidity. This high swept the high of this liquidity and pushed bearish, and now it retraced back. And then my initial thought was, okay, well, I'm not going to just enter right away. I need to see more liquidity create, because the more liquidity I see, the better I'm going to have a better idea of where the markets are going to go. So my expectation is to wait for price to come and take out this liquidity, as you see that I marked out here on the highs and the lows. And then once it sweeps it, I'm looking for the sell. So here, prices swept that liquidity, as you can see, clear. We had that aggression, we had the chalk boss, and then I entered, I had my zone supplied there, and then I just pretty much entered right away, targeting this low here. The reason why is because this is the area of demand. Now, obviously, you might be asking me like, well, it didn't really hit your demand. Well, yes, that's true. Normally, when I enter my the markets, I always take about 50% or more out of the market, and then I let the rest run. And of course, when I let the rest run, right here is where I broke even after my entry. So this trade was dead after I broke even. Therefore, I couldn't, I couldn't keep it running, obviously, because that would be stupid. Now, let me just zoom out here for a second. Right over here. Now, here, as you can see, I had my demand zone placed over here. My intention here was to look for buys pushing bullish here, and my rule of thumb again is waiting for liquidity to be taken. Although there's not a bunch of liquidity here really, a lot of the markets are just pushing bearish, just showing us a lot of highs and lows creating, but not not a lot of liquidity creating. Of course, you can argue and say, well, yeah, this is all liquidity, which is very true. This could be considered as your trend line liquidity or what have you, but I don't like to look at this kind of liquidity really. It's a garble of mess. I like to look at a lot of liquidity that looks like double bottoms, double tops, triple bottoms, or potentially, your fairly double bottoms kind of like this, right? Something like this, or maybe fairly double tops like this, something that drops like that, right? And then just continues bearish like this, and eventually comes up here, mitigates something, and then goes bearish again like that. So I didn't see any of that in here, obviously, as you can see. And so what I was kind of thinking to myself, okay, well, if prices had to take some sort of form of liquidity, which I can't really see. And normally, if I can't see the liquidity, I'm not going to trade. But I did it anyway, just to see if I could look for potential buys here. This was my high here. This was my high here. You can see price broke. It had a chalk. We got the chalk. Had my last down move, or the last down candle before the major move pushed up. We never mitigated, which was something, of course, it's a shocker sometimes. And when it don't mitigate, sometimes I don't try and rush into the trade, right? But what I could have done is adapt to the market, market structure potentially. Of course, if I adapted here, you wouldn't have seen, there's a break over here. I wouldn't have been able to enter this market either, because I would have been looking for buys right in and around this area. So it would have been hard to look for entries here, right? Which is okay. Sometimes it's okay to miss, trades, because you don't want to just be chasing trades and be in on every trade, right? I marked the supply zone out here only because we had a huge retracement. We had the high, the low, this high, and this low. This high here broke this low, so therefore I was looking for this area as the supply zone. And I knew prices should go bearish here, but I was looking to scalp a little bit, take advantage of this move. I entered this trade on the 1 minute, on the 1 second. Now, the reason why I look for buys here, and a lot of you may think, well, why are you looking for buys here if if it's a supply zone? Good question. Well, a lot of my rules work around the liquidity theory, right? There's liquidity right there. Prices came and mitigated, showed me the aggression. Now I waited for price to come back, and this is when I looked to buy. But now you might be asking, well, when prices retrace, I didn't quickly just buy, right? I wanted to see what was happening, because prices did leave very aggressively here. They didn't mitigate this low just yet. So I was waiting for price to show me more liquidity. Right over here, you can see, there we go. I saw more liquidity there, right? Prices came and took the low, mitigated, showed me that aggression. Now I was looking for the buy here. I was sold here instantly. We had the chalk right there presented, as you can see. Right, there's that chalk, and there's my entry. Not entry yet. Until price came and tapped me like that, that's when I told myself that was my entry. I was targeting this high primarily because we had a huge supply zone here, and I didn't know if prices are going to hold after this high here. So I did the liberty of just targeting a safe high where the market was going before, or where it was at before. And I took some partials along the way, of course, and I TP'd here the rest just to be safe. There we go. You can see TP was crushed here immediately, and now we were looking for prices to go bearish here. So let's zoom out to show you guys what it looks like the rest of the way here. I didn't sell anything off here, although I was looking for the opportunity. You can see my supply zone here. It never broke and mitigated. It just started going bearish pretty fast. I had my demand zone. I was potentially looking for buys here to go to serve the supply zone, you know, because we were still bullish again. Right here you can see this whole area here is bullish, right? You can see prices are going bullish. So I was waiting for prices. Once prices took liquidity, I was waiting for price to mitigate and then push bullish. Unfortunately, we didn't get the opportunity here, right? We didn't get the, we got liquidity, but this low here never broke this high. Therefore, I didn't buy anything. So I said, okay, great. Let's just adapt to the structure pushing bearish. And I know that we have another demand zone here holding because this is inducement in the market and price hasn't tapped this demand zone. So I took the liberty of adapting to the markets like this. As you can see, structure is pushing bearish, right? Nothing fancy. And then what I noticed here was we had a break of structure here. It broke my supply demand zone. So this would be considered as the flip zone. Once that flip created, we were seeing liquidity above the highs. I didn't go in it right away, although, yeah, I didn't go in it right away. So this is what happened here. I'll show you. Okay, so you can see there was an aggression coming in here. We broke this low here. We also noticed that there was liquidity creating at this highs. And what I always see here is one of my favorite areas to look for entries. Is when price does a liquidity sweep. This here is a form of liquidity sweep. It swept the highs here. Price pushed bearish, and then price went back up here. So this was my entry criteria here. As soon as price goes bullish, there you go. You can see price goes against the market here, taking out that liquidity, mitigating this high. So technically, this was my order block here, and it tapped that high, and I sold it right here. I split my risk about 0.5%. Once prices took off, I took about 50% of the way. Excuse me. Oops. I took about 50% of the market of the trade here, and I let the rest run. I do this for a single purpose, only because I'd rather pay myself out first before the market goes and takes me back out. Now, some people may have their different ways of managing, but this is my way of managing. I pay myself about 50% of the way, and I let the rest run, just in case prices, you know, don't tap my target, right? And if it doesn't tap my target, right, notice what happens here. Prices go against me, take me out. So now I've paid myself, and I've also broken even, which means it's a win-win for me. It's a loss for the market because the market loses and I win, right? So now here is what we were looking at over here. Let me show you this here. Now, I was still selling here only because, as you can see at this high over here, prices are going bearish. This is the extreme high. This is the extreme low. Prices are recorrecting themselves, right? Prices are pushing bullish. I noticed we had a bunch of liquidity here that wasn't taken, and all the way here as well, right? So you can see if I zoom in here, you can see how prices are right over here. There's that liquidity area. The prices were forming, and then now prices have come up here, swept the highs, and now I'm looking for the sell-off. You can see here we had that perfect chalk. And then once that chalk has happened, I immediately took the sell and I went bearish here. Now, of course, I pay myself 50% of the way and let the rest run. My anticipation was to have price come and tap this demand zone, and it hasn't, obviously. So then I broke even here, which is it's still a win-win for me, right? Then I zoom out and to look out for more to see what is actually happening here, right? Could we be bullish? And I'm thinking to myself, well, no. Can't be bullish because price hasn't tapped this demand zone. There's still inducement there, and we've just created a lot of liquidity here. There's a lot of buying pressure here and a lot of more buying pressure here. So my anticipation was to look for more sells, and what I was doing here is I saw this high and this other sell here where sellers would try to sell. They failed. They broke above, swept this high of the liquidity, and then my rules always fall into place. Once liquidity is taken, look for that aggression. There's your aggression. We had that chalk. That chalk presented right here. Break, right? So I'm looking for price to come here and take off as soon as prices test at this high. So prices are pushing bearish, and I'm happy, right? I'm waiting for about 50% of the way for the markets to go bearish here in order for me to at least take some capital out, or at least some of the profits, right? We entered this market again here only because we had more liquidity, then we had aggression. Price came back up to this order block, and we look to enter it as always. Make sure to always put your risk just a bit above the highs, because you never know when price is going to come in and sweep the highs and then take you bearish. Because if it comes and takes you out and sweeps the highs, you may have your stop loss right there, and then you may suffer that loss over here when you had your stop loss. So always put your stop loss and your risk just a bit above that current high, just so you can be safe enough, and so you can ride the the wave essentially. So you can see prices are going bearish here. This is all beautiful to us. And what we're doing here is we're targeting this low, this demand zone. Once we hit this demand zone, we take most of our profit out here, because now we've hit 50% or more of our profits. Now notice I actually extended our reward here. The only reason why is because we had another demand zone down here that I was really looking to target on the long term, but in the short term we were looking to target this short demand zone here, which we've had our success obviously. Now along the way I'm paying myself extra, right? This is just extra where the markets are continuing pushing bearish. I don't have to do a lot of the work. Obviously, I'm just taking about 3 to 4% every time the market drops, right? I'm only going to break even if prices ever go against me here and come to my initial entry, right? And I'd be breaking even. So there's no loss to me. I'm going to kind of play this a little faster so you guys can see what's happening. Prices kept going bearish. I was great, so I paid myself a little bit more, right? And notice I'm taking most of my capital as I keep going bearish here, and I only leave a little left, right, for the market to do whatever it wants to do. As you can see, prices are going bullish here. Now I'll explain as to why they went bullish here, and the reason why they went bullish here is because, well, you can never be too correct as to where the markets are going. We've had this is acting as inducement in the market here, and prices never really touched our demand zone. This is our high here. There's a low, there's a high, so technically you can say this is our demand zone, but I made it very small here in order for us to come in, for price to come and tag here. You can zoom in here and see there's more liquidity resting here where price hasn't taken. So that's why I had that initial thought of seeing that prices were going to go bearish here and tag this demand zone. Now, of course, sometimes I like to have fun. It's kind of funny to say I like to have fun, but I like to have fun just scalping along the way, just because I like to make money. Who doesn't, right? I took a buy entry here, and I'll explain as to why. I had that liquidity set here. You can see price taking that liquidity, right? We saw that aggression, and then we immediately took that buy here because that was my rules met, right? And then you see prices push bullish. I immediately paid myself as soon as we went at least 50% or a little bit high, right? And then I cut the rest of the trade over here. I didn't do anything else from here. I just let the market do whatever. Again, entries here are very important, right? The entries really are the area where after liquidity is taken, that's where I enter. Okay, I need to see that chalk formation, and we had that perfect chalk formation here. Now, I was selling here just because we had a retracement that needed to happen. Let me zoom in here a bit so you can see what's happening. Now, the reason why I sold here again is because we had more liquidity, right? Liquidity is where price uses it as fuel and moves it to the opposite direction, or the intended direction, the correct direction. Right here we have a bunch of liquidity sitting. Price went up, took out all this liquidity as you see, and then we had that aggression. So my anticipation here was to sell it after the aggression came. I didn't sell it here because we had this huge wick to fill in, so I waited for price to show me a little bit, something a bit more, right? We had another break of structure. There was 2 breaks of structures here. We had this other liquidity here, and on the smaller time frame, it came in, liquefied another high here. So my anticipation again is to sell this as soon as price comes. You can see the price respected this high, respected this wick per se. We had that aggression. I waited for that retracement, and then I sold it as soon as price came in, and then I made quick money here. I actually just, to be honest, I didn't hold it here. I actually just took most of my money here and I got out because, you know, when I'm playing with the market and I don't, you know, and I'm just playing around with it, I'm not trying to stay in long term. I'm just in quickly and I'm out. I didn't hit profit here or take TP there. I just got most of my money out here and I got out, to be honest. So once I realized what was happening here, I quickly turned my train of thought, and I thought to myself, yeah, well, this is still bullish, right? Price is going bullish right here. We've had this break of structure. We have inducement here, a lot of liquidity, inducement liquidity. Here was this wick over here that had a liquidity sweep somewhere in here, or actually here, excuse me, right there. There's a break of structure that we can't see, but I know it's a break of structure because I've had this many times where I trade this liquidity sweep. I know that it's a liquidity sweep. So here we saw a chalk formation, and this is when I said to myself, once there's a chalk formation, I always take that entry. And there we go. You see that entry was made, had my risk just a bit below, and then as soon as that has happened, I just enter the markets and I let the rest take care of itself. Now, obviously, when we're pushing bullish, again, paid myself about 50% of the way, and I let the rest run. I was targeting this supply zone because this is where prices were supposed to come or are supposed to come, and I paid myself nicely. You can see I targeted this high here because there's liquidity here, so I targeted just right above where liquidity was for prices to come and take that liquidity. As you see, prices went up, took that liquidity right there, right, and then when prices extended again, I just finished here at the end of the supply zone. And so this is where I finished my entire all my trades. Okay, so it's very simple and very easy to follow, guys. You know, at least in terms of trading is very easy unless you put the work in, right? Of course, we offer a lot of this in our mentorship, in our online courses. Guys, if you're interested in our if or when you guys like to come on and join our course, definitely go consider joining our course, because we have a great academy. Anyways, guys, I hope you guys enjoyed this analysis and this recap video. And if you guys really like this video, please throw a huge thumbs up and subscribe to the channel, because we always give out free content. Until then, I will see you in the next.